I'm Matt Bouchard here in New York City for Nareit's REIT Week 2018 Investor Conference. Joining me today is Jim Connor, Chairman and CEO of Duke Realty Corporation. Jim, thanks so much for joining us.
Glad to be here. Thank you.
Now, can you start by talking about trends that you're seeing in rental rates across your portfolio?
You know, rent growth in the industrial sector has been really strong for the last few years. For example, in 2017, for the entire year, we grew rents on a cash basis about 6.5%, on a GAAP basis 20%. In the first quarter of this year, we grew those same rents 12% on a cash basis and 25% on a GAAP basis. So those are really strong numbers, and that just speaks to the strength of the industrial market across the U.S.
And Duke has been active disposing of your non-core assets. Can you talk about the types of properties you've sold and if you expect to continue to be active in this area and how that will compare to the acquisition activity?
Sure. Well, as we've repositioned the company over the last ultimately 7 years, we've sold office, we've sold retail, we've sold a lot of non-strategic land, and then obviously last year we sold the medical office building. So in total, we've sold about $10 billion of assets in the last 7 years. We've redeployed that back into all industrial. So the answer to your first question is no, there's no more, because it's all industrial today and we don't have any other non-strategic assets. And while we'll prune the industrial portfolio to time, that'll be much less significant than we have in the past. Of that $10 billion, about $4.5 billion of it went back into industrial acquisitions, properties that we acquired in Tier 1 markets that we wanted to grow in. The balance of it went into new development and deleveraging the balance sheet.
Now, picking up on that, the last topic I want to talk about is development. The company's always been active in development, but are there any signs of oversupply in any of your markets?
No, there really aren't. You'd really have to drill down to the sub-market level in some of the actual markets to see any softness. And you've got vacancies nationally at 4.5%. So in a lot of our markets, you have vacancies that are below 2 and 3%, which is effectively full occupancy. So now in a couple of submarkets, you'll see 6 and 7% vacancy, and people start to think that that's softness. So on a relative basis, there aren't any markets that are oversupply. And our development pipeline is as strong as it's ever been. We've got about $850 million worth under development. That's about 11 million square feet across the country right now, and it's 57% pre-leased. So, it's a much better risk profile for us than in a previous cycle. So development business is very good.
Great. Jim, thank you so much for joining us.
Good. Thank you.
For more from Nareit's REIT Week, be sure to visit Nareit's website, REIT.com.